Welcome back to Fast Market here on the Schwab Network. It's time for cash tags. For that, let's bring in our next guest. That's going to be Megan Brantley, VP of Research at LikeFolio. Welcome back to the show, Megan.
Thanks for having me, guys. Happy Monday.
Happy Monday to you. CCL, stock's up about 43% over the last year. It's pulled back from recent highs, but, maybe consumer spending concerns moving forward. But if you look at their earnings, and not just CCL, but RCL, NCLH, Norwegian and Royal Caribbean, they've all, reported like record quarters. CCL's got the most debt on their balance sheet than the other two. But what kind of data are you guys seeing? Is there any slowdown in bookings for these cruise lines?
Yeah, so, cruise lines in general have become a really interesting kind of value vacation for consumers because at large, consumers are reporting that they're spending less whenever they book at a cruise line just across the board versus what they would pay if they were going to, buy airfare and fly somewhere and stay in an Airbnb or a condo or wherever. And so I think that this is an interesting play for sure, just from consumers who are seeking to save a little bit of money on their vacations, and they're open-minded to cruise lines now. We saw a little bit of a rejection after the pandemic, and consumers seem to have gotten over that handily. And I would say Carnival versus other peers, like you mentioned, like Royal Caribbean or like Norwegian, this is the value play even of all of those names. And so this is one, whenever we look at Carnival, though, we worry that it has a bit of a high exposure to that lower income consumer or the consumer that is feeling a bit of a pinch. Whenever you see here this change in visits, you can see Carnival is about in the middle of the pack. It is trailing Royal Caribbean, and for us, Royal Caribbean really is best of breed. But when we look at forward-looking booking mentions, those still look positive. So, heading into earnings, I would say, year-to-date, the stock is down around 7%. You could make an argument that the bar is lowered for Carnival Cruise Line. However, we do worry about some updates to its loyalty program that are dinging its consumer sentiment, and just in general that this may be more impacted by a consumer who may be feeling a little bit of a budgetary pinch compared to competitors.
Megan, the good news for Carnival is they focus on the Caribbean and Northern Europe. Very little exposure to the Middle East or any of the problems going on in the world right now. Fuel, crude oil is problematic. It's going to raise their expenses, but their demand is at all are higher than pre-pandemic. So this is a company actually doing better. And like you mentioned, they are the lowest price point. So if you're looking for the entry-level cruise to go on, not the high end, but one that can be affordable by the most people, it's Carnival, right? They have the lowest price point. The other ones can get a little pricey. Megan, there's two kinds of people in this world: the people that love cruises and those that don't get how cool they are, right? Cruises. So you have to understand how convenient this is, and once they realize that, that's why there's so much demand for these cruise ships. They go to the cool places. You always have someplace to stay, and you get off, you come back on, you eat dinner every night. It's a very convenient way to take a vacation. Now, the problems with the cruises are just obviously the expenses of higher energy is going to be a problem, but this is the lowest price point. So, but I you know what? You made a great point in your presentation how that might be the consumer that is feeling the pinch and not able to, it's more elastic in their demand. So I can see why that would be a concern for people. Your thoughts on anything I just said, Megan?
Yeah, I think that you're right that there are cruise people and non-cruise people, and it seems at large the cruise lines tend to be winning over more and more vacationers as consumers get more comfortable with this concept and see the benefits. I will say we are seeing outsized growth in other competitors, whether it be the Royal Caribbean, one name not included on here where we see tremendous growth is the Disney Cruise Lines. And so I think that there are more and more options for consumers. Now they may be pricier options, but they do offer more premium experiences. And I would say probably the biggest red flag in our data for Carnival Cruise that isn't necessarily reflected in that chart snapshot that we showed earlier is its sentiment. And one thing that Carnival has done recently is it's changed its loyalty program. So it's switching to a spend-based system versus a stay-based system. It's removing some of the lifetime perks. And so, investors could look at this and say, okay, this is great because now, Carnival is going to be able to even improve its margins further. It's going to be able to increase, on-ship spending that maybe were insulated in perks previously, but we're seeing a pretty significant backlash from consumers who are now, once Carnival Cruise loyalists who are saying, maybe I should explore some alternatives. Now, I think that it's really early. These changes in this program won't even be in place until next year. So, it's too early to say what the actual impact will be if these are just consumers who are, a knee-jerk reaction, really upset about changes that will impact the perks that they receive. However, it's something on our radar because when we look at companies long-term and we see serious dips in sentiment like this, especially a drop by about 10 points, that's pretty significant and could indicate a couple of cracks in Carnival's, value proposition to consumers.
Megan, when you look at this is the world's biggest cruise line, right? They dwarf the other ones. Their balance sheet, as I mentioned, isn't as good. But I think this is all about the job market at this point. Are you guys seeing any cracks like we've seen in weekly jobless claims when those have gone up a little bit, maybe continuing claims? Have you seen any relationship there with if the job market does start to crack, this is where it's going to hurt because this is where the first thing that people pull back on typically is taking, a more expensive or travel to type of vacation.
Yeah, and this is one, like we mentioned earlier, that is a bit more exposed to that consumer who really is hunting for that value vacation. So if a consumer is already trying to stretch their budget, Carnival Cruise may be where they're turning, but when that budget really, really gets stretched, Carnival is also more impacted versus, say, a Royal Caribbean or Norwegian or even a Viking that really caters to those premium travelers and those consumers that have a higher income. And so I would say there's a little bit of risk here when we look at Carnival Cruise. We see a bit of a red flag in terms of long-term sentiment. Data right now looks decent. We still have growth year over year. So I think that you could make a case that Carnival would overperform from a relatively low bar. But for us, this isn't necessarily the name, if we were to pick a name in cruise lines, that we would be betting on long-term.
All right, great stuff, great data. As always, hey, Megan, real quick before I let you go, do you guys have an earnings score on this one going into the report?
Yeah, we're at 18, so we're technically neutral, but you could make a bullish case just based on still that growth that we're seeing in terms of forward-looking bookings.
All right, great stuff. As always, Megan, have a great day.
Thanks, guys. You too.
All right, that's Megan Brantley, VP of Research at LikeFolio, breaking it down for us. Kevin, the option market's pricing about a $1.50 move either way in the stock. IV percentile rank only 31%, but that's probably because it's bounced off of lows that we saw a couple months ago. How do you want to look at this one from an example trade?
Yeah, I think that this is an interesting one because